Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is October 5th, 2023. This is the Kickstart video for the today's day, where I take a look at the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. Focusing on the euro versus US dollar first, the hourly chart here. This move to the downside from last week's high to this week's low. The 50% midpoint of that level of that move comes in at 1.05326. Here, and notice in trading yesterday, the high price came up to that level and found willing sellers. In trading today, the high prices approached that level and again found sellers. In the current hourly bar, we moved up toward that level ahead of the initial jobless claims and the trade data. That data came in better than expected, at least the jobs data did, and that forced the price back to the downside. In the process, the price moved back below the 100-hour moving average. Now, admittedly, the price has been waffling above and below that moving average in trading here today. So the market's unsure why. Well, we have the U.S. jobs report, that BLS report tomorrow, coming out with the expectations of 170,000, with the unemployment rate moving down to 3.7% from 3.8%, and average hourly earnings rising by 0.3% month on month and 4.3% year on year. That's going to be a key release tomorrow, and perhaps the market is just waiting for that, staying around the moving averages. By the way, the 200-hour moving average here, that's a green line in the chart, haven't been below that or above that level since this day right here around September 20th. So those moving averages are putting a lid on the euro versus US dollars. The market is more biased toward a higher dollar with the Fed staying higher for longer theme, and U.S. interest rates moving higher still. So that is a guiding light here for us going forward. It will take a move above the 50% retracement above the 200-hour moving average green line in this chart at 105.38 to increase the bullish bias for the euro, the bearish bias for the U.S. dollar. Absent that, and the sellers are still more in control now. The 104.83, that's another key level. Note in trading yesterday, the price came right down to that level in the New York session, found support buyers against that level, which we were expecting to see whether or not that holds through going forward. We will see as well. But the 104.83 level is a key level on the downside. Recall, going to the daily chart, if you look at the 104.83 level, that level corresponds with the low of this swing area through here. Just blur your eyes. You see a ceiling here, and then you see a floor here with 104.83 as a low. In the month of September, the market came down to that level, and this week the market did move below that level, but could not sustain the momentum below it. And as I said yesterday, the price did move back above that level and then held support against that level. So keep that in mind going forward for the euro. It's a key level on the downside. If we move below that level, it opens the door for further selling. We could see a rotation down toward the 50% retracement at 104.05 in that currency pair. Let's take a look at the dollar versus yen. And recall, we had this move to the upside here off of the JOLTS jobs data. The price moved above the 150 level to 154 quickly then shed around 280 pips all the way down to the low price that we had in the month of September here, and then quickly rotated to the upside. Now that move to the upside did see the price action waffle back and above the 50% midpoint of this move to the upside from this low to this high, which is basically the move that we saw to the downside on Monday's trade, but Tuesday's trade. But in trading today here, the price did move below that level, and you can see the momentum to the downside here, but has since moved back above the level. And you can see the momentum to the upside. So we've retraced the full decline. We've done a full lap, and we're back above the 50% retracement level, 148.73. That's going to be a key barometer for this currency pair going forward. If we stay above it, then dollar moves higher. On the top side, we do have the 100-hour moving average and the 200-hour moving average as targets of 149.21 and 149.33. Get above those levels, it opens the door and increases the bullish bias for the dollar yen once again. However, there is going to be fear up here near the 150 level. So as a result of that fear from the central bank coming in and perhaps pushing the dollar yen back to the downside, the yen to the upside, So we have to be aware of that. We've already seen it in this sharp move to the downside. So just be aware that although the price may move above the 100 and 200 and 100 hour moving average, and that's more bullish, we have to keep our eyes on the potential for intervention or the threat of intervention that could cause the price action to be very volatile. Let's take a look at the sterling versus US dollar next. And this currency pair has been trying like the little engine that could to get above the 200-hour moving average of the last 2 trading days, or day and a half or so of trading. We did move briefly above it here in trading yesterday, but failed, and then we tried it again and failed. Went up to it again in trading here today and failed, and moved up to it once again right before the data and failed again. We are back below the 100 and 200-hour moving average. Similar pattern to the euro versus US dollar, hanging around those moving averages. Those moving averages will be key barometers for the pair. If we're able to get above those, that's more bullish. Here we look toward the 618 of this, just this last move to the downside here. If we get above that, we start to open the door, and we'll start to look for a bigger retracement from going back to the highs right there. That's to come, okay? But until then, until we get above those moving averages, the bias remains more to the downside for this pair. We are dipping, or trying to dip below the low price that we saw from last week's trading at 121.109. In trading yesterday, we came down to that level and bounced off it. In trading here today, we're trying to do the same thing. We'll see if we can bounce off that level. If we move below that level, we could see it wander more to the downside ahead of the U.S. jobs report tomorrow. So there you have it. Look at Kickstart to your trading day, looking at the euro versus US dollar, dollar versus yen, and sterling versus US dollar. If you like this video, give it a thumbs up. If you want to share it, you can do it. Go ahead, just hit the share button. It would be greatly appreciated. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.